say he thinks Macy's earnings might be bad this quarter, and I feel the irresistible urge to deviate from my long-term financial plan and sell. Just like Alcoholics Anonymous, Reggie and Sharon will be there to remind me that even if the analyst is right about an earnings disappointment, it's almost surely too late to do anything about it now. The market has already absorbed the bad news, and the price has already adjusted so that Macy's is probably a fair bet again. Oh, I might still sell, but I'll do it without panicking. We can help each other keep discipline in our investing too. When Sharon starts talking about selling shares because she needs money to get away from the stress of her job for a while, Reggie and I can help her decide to make it a weekend in Las Vegas instead of a whole week in Paris. Don't underestimate the social benefits of an investment club either. People get together with the alumni club to watch Ohio State play Michigan or Tennessee play Florida. They participate in sewing clubs, hiking clubs, book clubs. Why not an investment club? Have some fun and enjoy the confidence of knowing you're not investing alone. Sometimes investment clubs pool their money to make investments. I see pluses and minuses for this. You get all of the advantages of clubs that don't make investments, plus you gain a level of intensity and gravitas that you usually won't find in clubs that don't invest. These clubs can nudge people who have trouble making decisions and taking action. Some people truly intend to invest, but just never get around to it. We know which road is paved with good intentions, don't we? If you decide that a club that actually invests money is for you, then I'd advise you to take it slowly. Visit at least a couple of groups before joining one. That's because by joining, you'll be agreeing to invest in the stocks that the group likes. You may not like some of those choices, but you'll have to live with them. Members of successful clubs share the same general investment philosophy. Successful here doesn't just mean they made money. It also means that members were comfortable with their investments. You also need to understand that if your investment club does the actual investing on your behalf, then the paperwork gets messy. The simplest way to manage investments is for all of us to put the same amount of money into the club and for all of us to share equally in the returns. If you do that, though, then you'll soon see that's far from the best way. How will we handle it when Dottie has a baby and can't participate fully? Will we kick her out? The equal share system can't handle partial withdrawals very well. Eventually, the equal share system will close the club to new members too. That's because the existing members' regular investments will continually build the value of the portfolio. It'll get too expensive for most people to buy an equal share. Most clubs that start out using the equal share system convert to what's called the unit value system eventually. Lots of big investment funds use the unit value system. Remember the net asset value calculation from Lecture 13? That's what happens here. The numbers are just smaller. For example, if our club has 4 members and we all start by investing $5,000, then we can each hold 50 units with each unit worth $100. Changes in the market price of the securities in the portfolio are easy to handle. They rise by 10%, then we each still hold 50 units, but now they're worth $110 apiece. The unit value system makes it easy to change the club's membership. If we decide to admit Kelsey to our club, then she can simply buy units for $110 each. Immediately after she invests, the club will have the same stock portfolio as before, plus $110 in cash for every unit Kelsey bought. The club can decide how to invest the cash at the next meeting. The unit value system is also better if someone wants to increase his or her stake. If you join mostly to get your feet wet and have decided that now it's time to get more involved, then you can do it by investing $110 per new unit. If Dottie's baby makes her cut back her participation, then she can do it by cashing maybe half of her units. The club will either buy her out using uninvested cash or else raise the needed funds by selling part of the portfolio. If you'd like more information on investing clubs and resources for participating in one, they're available on the web.